In this video, you'll be learning about this topic. So I buy into the stock to flow model.
Yeah.
Stock to flow model suggests we're going to be over 100,000, call it September to October, whatever time frame, end of 2021, we're going to be at 100,000 on this. I'm looking at how the market's already reacting to just us breaking 20,000. We're seeing headlines on CNBC, is the dollar doomed, with crowns on Bitcoin, right? All of these things. We have Tudor Jones. All these people are owning it right now. The headlines out there at 20,000. What in the world is going to happen on the 24-hour news cycle, on the 24-hour business news cycle, when Bitcoin goes through 100,000, potentially here in 9 months to 10 months from now? And so when I look at that and I say, and I see that you're already putting out the example, you're not doing it with 1 or 2% of your balance sheet. You're doing this in an all-in kind of, such an example to what the power of this really is, right? And so when I look at all the money that's pent up in fixed income, yielding nothing, and it's to the tune of $100 trillion, and it's almost like the barriers to get that money out of there is so high and so difficult for them to get the money out of that pool. And there's a way to do it, and pretty much the only way I can find to do it is through a corporate balance sheet kind of move by issuing debt that's convertible. I just don't know how you're going to be able to keep the lid on that type, or the genie in the bottle on that trade come a year from now if Bitcoin's going through 100,000.
Well, let's think about the ways that this money is going to move, though, and all the. Let's talk about the layer cake of money. Okay, so there's individuals, family offices, and tech entrepreneurs, and privately they can go buy Bitcoin, and they're the early movers. Then there's the hedge funds, like the Guggenheims of the world, and after they get their head around it, Tudor Jones, Stanley Druckenmiller, Bill Miller, they can put it in their charter and they'll buy some, and they talk about 1%, 2%, 3%, and they'll start to move. But there's something that keeps them from buying 10% or 20%. The first year, they'll dip their toe in at 1 or 2%. Next year, they could amp that up by a factor of 2 or 4. So in 2021, the simplest way we grow is at some point, Bill Miller and Tudor Jones and Stanley Druckenmiller say, this worked really well, but why did I buy 3 times as much gold as I bought Bitcoin? Because Bitcoin performed 200% up and gold was like up 10% or 15 or something. So when you transition from that idea that Bitcoin is a great idea to the idea that it was really stupid of me to invest in something which underperformed, you would see 2, 3, 4, 5x that money coming from those investors. Now, there's another pool of money. The next pool of money is people that can buy publicly traded stocks. and the money's locked up in retirement funds like 401ks. There's a lot of investment funds that can buy public stocks, and they can buy a GBTC, they could buy MSTR, but they can't buy Bitcoin. They just can't. Okay? Lots and lots of that money. Ask, what are they looking for? Companies with Bitcoin exposure. PayPal, Square, Grayscale, MicroStrategy. There's a dynamic there, and the dynamic is, companies that have a Bitcoin strategy either on their balance sheet or on their P&L or both. Like MicroStrategy is strong on the balance sheet. Square is strong on the P&L. There'll be other companies that'll come. Coinbase will come public, right? They'll be strong on the P&L. Maybe, interesting question is, will Coinbase actually put Bitcoin on their balance sheet? Big question. Coinbase can do an IPO, raise billions of dollars, and buy Bitcoin with it. Will they? This is my plug, Brian Armstrong. I hope you do.
You're nuts if you don't.
But, you're going to see more and more of that happen. That's another part of the layer cake. Then you have companies that can do debt, companies that can invest in debt. There are 200 convertible funds and they invest in debt. That's all they can buy. They can't buy the equity, quote unquote, too risky. By the way, people that buy equity, if asked about Bitcoin, they say, I can't buy Bitcoin, quote unquote, too risky. Okay. So at the end of the day, one layer is the hodlers with their private keys, running their own nodes. And there's a lot of people who say, oh, that's too risky. And there's another group of people buying Bitcoin on Square Cash and on PayPal, or buying it through Coinbase, less risky. And there's another layer buying Bitcoin through institutional funds like Grayscale or the like, less risky, but still too risky for the equity people. Then there's another layer of people that will buy the tickers like Square and PayPal or MSTR or GBTC. Then there's another layer of people that will buy the debt, the convert debt. And then there's also secured debt. Maybe at some point people will start to do secured or convertible debt that is invested in Bitcoin. All of these are different buckets of money. You've got you've got insurance companies like Mass Mutual, and they've got the $230 billion in their general fund. If they decide they can start to buy an investment grade asset and anoint Bitcoin as that investment grade asset, then there's no reason that number can't go up by a factor of 100 or 1,000, right? So what we have is, I guess, about 7 layers of money. And I've met guys like, I'll meet a person that runs a hedge fund that invests in publicly traded companies. They're like, well, I like Bitcoin, but I'm not allowed to buy Bitcoin per my charter. I have $10 billion, but I can't buy Bitcoin. Like, to change that requires I change the minds of a committee of 24 people. It's a 24-month process. We got to go back to all of our limited partners, and we got to redo our charter, and that's going, and then that's a 3-year process. So they like Bitcoin, but they can't buy it. But if they like a public company, NICE or NASDAQ listed stock, they can buy that. And so it's not really a matter of right or wrong or orthodoxy. You just got to give them the on-ramp for the money to flow. And then I literally met people on my convertible bond roadshow, not a roadshow, but when I had my meetings, person goes, yeah, I've owned Bitcoin since 2013. I love the idea. Yeah, we're in. $20 million. Okay. 60 seconds, 5 minutes. I'm going to give you $20 million.
Yeah.
Why don't you buy Bitcoin? Oh, that'll take me 3 years. Like, we can't do that.
Yeah.
You have to move a mountain to buy Bitcoin, but they can buy the debt in 30 seconds. In fact,
that's what I'm telling you. I'm telling you, the rates are going to go negative. In a year from now, the rates are going to go negative because the oversubscription is there's going to be so much demand for it. It's going to be nuts.
We're just doing the work of providing people the on-ramps.
Yeah.
When Fidelity provides a Bitcoin fund for consumers that you can put your 401k into, then billions can flow. When they provide an institutional fund, then billions can flow. When companies come public and they offer you a stock ticker, then billions can flow. When you issue debt, then billions can flow. They're all just different ways to carve a channel from the asset ocean to the Bitcoin pond. And we're just carving that channel, and we're making it easy for people. And it'll take some time, but as people get more comfortable with Bitcoin as an investment grade treasury reserve asset, and that's the key thing, then there's $100 trillion worth of problem here. I mean, $100 trillion of assets that needs to find a safe haven home. And, people have been using sovereign debt as a safe haven.
So history has taught us when a currency fails, it fails in a spectacular way, and in a way where speed is of the total essence. If this 100,000 mark that we were talking about earlier happens in 2021, I just don't know how you're going to be able to keep the lid on it. I don't know how speed isn't going to fear is going to just take over the market.
Look,
you seem to think
I'm an optimist.
Yeah,
I'm an optimist there. So look, if you're living in the Weimar Republic and there is no alternative, you've got Weimar Marx, then you're going to have a complete collapse. But in fact, if you're living in a modern society where people have options, what's more likely to happen is as Bitcoin price goes up, money flows into it, price discovery returns to these other markets, there's a check and balance on behavior, and then people start to react to it and they start to act more rationally. So I would like to think that in a marketplace where there are rational alternatives, the Bitcoin is a stabilizing influence, and people go, oh, like for example, when a bank sees $1 billion go out the door, they say, I guess I better treat my customer better. Why is it they're leaving me? Oh, I'm not offering a Bitcoin, so I'll offer that. And then when 100 billion flows out the door, people notice. And when 1 trillion flows out the door, someone says, why is 1 trillion moving? Oh, well, because the currency is collapsing. Maybe we ought to do something about that. Maybe we should stop printing money. So, I'm going to continue to print $1 trillion a year and buy bonds because there is no inflation. Well, if the money starts to move and people start to see that that's a dynamic, maybe I'll slow down on the money printing. Right? Like in the Weimar Republic, there was no Bitcoin, right? I mean, that's why that went to zero. But there's Bitcoin here, and Bitcoin's an antidote to a problem. And so I think an optimistic view would be, as the price goes up, it becomes more appealing, and then it more people adopt it. It'll keep going up. Price discovery will return to the markets. People will start to act more rationally in the political sphere, and they'll act more rationally in the investor sphere in a constructive, peaceful fashion. That would be a good outcome.
I totally agree with you there that this needs to take place in a manner that's controlled in order for there to avoid the whole civil unrest and all that kind of stuff. But as far as the governments around the world being able to pull back on their printing, as soon as, I know the printing's going straight into the fixed income market, which is keeping the interest rates low. If interest rates start coming up, the value of everything on the whole planet starts to erode in a rapid way, right? So my argument against, not that I want this to happen, but I guess what I'm trying to do is frame the reality of what I think's going to happen. I don't necessarily know that the government can become responsible with their monetary policy because it makes the value of everything unwind, right? I
don't know. I don't think it's that constructive, to speculate about the zombie apocalypse.
I like that.
I think we should just focus upon what's constructive right now. And what's constructive right now is Bitcoin is a monetary network. Apple Computer can make $100 billion if they plug into it. Tesla can make $20 billion if they plug into it. The individual dentist, doctor, baker, lawyer that's struggling to protect their economic well-being and create prosperity in the future can benefit by plugging into it. As more and more companies and individuals plug into Bitcoin, their lives will improve, their lot will improve, and they'll be able to escape the path to ruin, which comes from attempting to grow faster than the rate of monetary expansion. And I think what we should be doing is we should be giving people, a clear, peaceful, constructive way for them to save their companies and to save their businesses and to protect their families and protect their well-being. And the Bitcoin monetary network is that constructive, exciting thing, right? I mean, I don't think we're going to get to the point where governments collapse and taxation ceases and we all have to go get a rifle and ammunition and antibiotics and operate on ourselves. I'm not really planning for that. I don't think it's that relevant. I think what's relevant right now is the Bitcoin is big enough for like $1 billion funds to take a position in it, for you to take $1 billion position. When it goes to 50,000, you can do it with 2 or 3 billion. When it goes to 100,000, you can do it with 10 billion, right? Companies like Apple and Google, when they start to see I can move 10 billion in and out of it in a day or 2 days or 3 days, then they're going to get interested. And as it marches up, it's going to be a solution to bigger and bigger companies. Then it will be a replacement for sovereign debt. It's not a replacement for safe haven sovereign debt now because you can't buy $2 billion of it in a minute. For example, I've done trades on the 30-year debt, and I've done $150 million trade on 30-year debt where I shorted it. Like I did it in March. I shorted it when the swap rate was 72 basis points. Okay. Someone's going to loan me money for 30 years for 72 basis points. So I thought, okay, I'll take that trade. It was a $150 million trade, and it took 15 seconds, Preston, and it didn't move the market 1 basis point.
Yeah.
I mean, it was 72, maybe 71, but that was, and that was my margin for what I wanted to move. So if you could buy $150 million worth of something and not move the market 1 basis point, that's liquid. So the sovereign debt market has that liquidity. Bitcoin, as it gets bigger, right? The number you want to keep your eye on is what's the daily liquidity? Like, can you buy and sell 4 billion a day, 8 billion a day, 1 billion a day, 20 billion a day? As the daily liquidity gets larger, its safe haven investment grade asset status gets better. When you're a big insurance company, you're going to want to be able to buy a billion of it or liquidate a billion of it quickly without moving the market easily. And so I think what's going to happen is it's going to grow at some rate. And, you either need to solve the problem of on-ramps for consumers, which is what Square and PayPal will do and what Apple and Facebook and Google can do. When that happens, 1 billion people can buy it with a mouse click or with a finger click. That, by the way, that's Mark Cuban's criticism. Show me it's easy to use, right? Well, the answer is, have you not checked out Square, Mark? I mean, Square and PayPal and Apple, and they're going to make it easy to use. They're making it easy to use. So that's one thing that has to happen. And on the other side, what has to happen is just these hedge funds and these institutional investors, they need to take $1 billion position. And I can count 3 or 4 of them that are about there now. And once you get to the point where you've got 20, 30, 40 funds that have taken $500 million or $1 billion position, Bitcoin starts to trade in an area where there's $5 to $10 billion of liquidity a day, and the volatility goes away. When I can go and I can sell $1 billion of it in an hour and not move the market, then that's the point at which the Facebooks, the Googles, the Amazons, the Apples of the world will say, I guess we can do the treasury operations with this. They probably won't be the first, but unless they really, Tesla might be because they take risk, maybe. But more likely it'll be mid-sized companies that have 500 million, 250 million, 800 million lying around, and they'll start to move into this because this is accretive to them. And we'll get this positive feedback loop, companies will do it, their stocks will go up. Other people will say, maybe it's not so scary. They'll do it. The hedge fund guys will do it. They'll make money. And then they'll go from fear to greed. First, they thought, I'll do it 2% and I made a bunch of money. I'm afraid it'll work out badly. Then they'll go crap, I lost money on 98% of my portfolio because I invested in garbage. And maybe instead of 2% good, 98% garbage, I ought to actually move to 10% good and 90% garbage, right? And I mean, by the way, 10% good, 98% garbage would be 5 times as much money coming from institutions as are coming now, right?
Yeah.
So all that starts to happen. And as that happens, as all of these companies and investors buy into the network, you're going to get their lawyers and their lobbyists. And their lawyers and their lobbyists are going to defend the network. And you've got PayPal is going to protect the network. Square is going to protect the network, right? You're going to have anybody that ever invested. If you have $1 billion of Bitcoin, you think you're not going to pick up the phone and call your congressman or senator and say, don't F with this?
Yeah.
So that happens. And then the political dialogue is going to evolve. And right now there's one view of the world, but Bitcoin is going to, in a constructive way, infect everybody's minds, and hopefully it'll get them thinking about a different view of the world, and that'll be a good thing. So I'm optimistic that that as this spreads, this can be a force of good, and there's no reason why it won't grow faster, but it'll be progressive. People have to get over the technical challenges, the charter challenges. One narrative we hear a lot is Guy runs $1 billion fund or a multi-billion dollar fund. Okay, he likes the idea. First, he's going to buy some on his own account to get his feet wet, to get used to it. How does this work? Okay, now I'm comfortable. Now I'm going to bring my fund into it. Like me, Michael Saylor, what did I do? I buy it personally. I understand how it works. I get comfortable. Then I go back and I talk to my board and I talk to my officers, and then we do all of the due diligence and we work through the accounting and the regulatory issues and the corporate governance issues and the research to figure out how operationally, security, how we do it, right? That's a 12-week, 24-week delay. And so a lot of these things, there's a 3-month, 6-month, 9-month, 12-month delay. There are funds that have, hundreds of billions and trillions of dollars. They've got on their agenda, like somewhere in February, they're going to have a meeting to discuss Bitcoin, And so when they have that meeting to discuss Bitcoin, then 3 months after that, 6 months after that, they might start to move. And that's not a bad thing. It's a good thing, right? Because everyone listening to your podcast has a chance to continue buying this stuff, right? You're going to get in ahead of successive walls of money that are going to come wave after wave. And, when it gets to the point where it's $10 trillion, it starts to work for small nation states. And when it gets to $50 trillion or $100 trillion, it starts to work for countries and countries, institutions, endowments, corporations. Everybody has the same problem at a different level, but some of them don't recognize this as the solution yet. It's human nature. You have to make it easy for them, and you have to give them a role model. So when I have a role model, when another company like me did it, like MassMutual did it, MassMutual did a little bit. The next 100 insurance companies will say maybe we should look at it. Then MassMutual scales up by a factor of 10. Other companies come in. Each of these is a little brick in the road to something better. And so I think we kind of get to sit back and enjoy the way it evolves, and each of these things that happen, they're going to be good for the network. Like every single time a new constituency plugs in the Bitcoin network, they're going to plug a functionality gap in the network. When a Fidelity comes aboard, there's a pool of money that couldn't invest in Bitcoin except through Fidelity. Coinbase is another pool of money. When Coinbase comes public, there's another pool of money that couldn't get into it except through Coinbase's public offering. Each of these things is another extension of the network. The Bitcoin blockchain is the core base settlement layer, and there's going to be hundreds and hundreds of, call them member banks. They're all just kind of member banks, and Bitcoin is the central bank in cyberspace. And there's someone doing business in Nigeria. Well, that someone probably won't be my company. And every country is different. They've all got political requirements, regulatory requirements, technical requirements, cultural requirements. You could almost think of Bitcoin as like it's a massively franchise. It's a bank franchise or a bank franchising company, ultimately decentralized. Anybody can start their own bank. If you're a dentist, it's a bank for your family. If you're a small-time operator in Nigeria, it's a bank for, 47 people in your village. If you're Square or PayPal, it's a bank for 100 million people. If you're Apple, it's a bank for 1 billion people. If you're Fidelity, it's a bank for institutions. There's someone that's going to bank, pension funds and endowments and other types of money. They're all just different banks, and they all cater to a different clientele who all have different requirements, except that they all share one requirement. They all want to store their value forever. There's no one that'll tell you, I want to lose all my money, right? So everybody's got the problem. The answer is different. And what we see in front of us is we see this Cambrian explosion of innovation, all sorts of companies solving the problem in different ways with different instruments. And the market is going to sort out the winners and the losers. Some people are going to fail because they can't execute. Other people are going to try to bring a product to market and the customers don't want it. Other people are going to create a really good product and some regulator is going to shut it down. You know, it works in Wyoming, but it won't work in pick another state. In some case, I'll do this thing in Nigeria or Zimbabwe and they're going to cut me off. And, you know, the market will migrate to the next solution that works in Zimbabwe. Maybe we'll go from a centralized exchange to a decentralized solution for Zimbabwe because the politicians are hostile. And maybe the politicians won't be hostile. And it's going to be happening in 20,000 places every month differently, as fast as it can happen. And that's really the beauty of Bitcoin.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.